All right, it's Monday the 26th. Market just closed. Let's take a little recap of what happened. So in the previous videos, well, we basically nailed all the moves. So all the way from this top up here, sold this, came back down, bought this, sold this. Down here, we thought there might be some sideways pattern, but ultimately knew it was going to go down, and it's come down. It's come down a bit faster than I thought, but now we're down here. What do I expect now? I expect a bit of a bounce. I expect a bit of a counter trend bear market rally. So the SPY, I think, will bounce. First resistance being 370, 370, 371, whatever, 370-ish. And then absolute resistance at 388, let's call it. So if I was to very quickly, I'd call the first one around here. Very, very quick bounce. Second one there. Now, I don't know. We might just keep going down. Obviously, this is just my predictions and my opinion, but that's so far the two levels I can see. And ultimately, I think we'll then go lower. We're going lower. Unless the Fed pivots, which I don't think is going to happen for some time. The Nasdaq, same sort of chart pattern, a bit weaker today because it sort of ventured higher in the day, but then closed near the lows. So where would the resistance be there? I don't know, about here, about there. I haven't done all the lines, but I think you get generally where it would be. Let's see if we can even bounce that high. I don't think the chart's going to break out unless there's some macro change. I don't see anything coming. Dow Jones is the odd one out because it has already broken its double bottom low. All the others have just double bottomed. I need to clean this chart a little bit now. There are some lines that become irrelevant. But yeah, where do I see resistance in the Dow Jones? I just see maybe here. Prior support becomes resistance. And if it really goes higher there, but it would have to do it quickly, otherwise it breaks out of the descending line. So yeah, they've all got the same sort of chart patterns, supports and resistance. The Dow Jones again being the weaker of them all. Although usually it's the Russell 2000. It used to be the strongest one, but it's quickly caught up. So now it's back to being equal with the SPY and the Nasdaq. You can see those charts are the same. The Russell being weaker. So let's see if the Russell can catch up with the Dow Jones on the downside. But again, I feel like we're going to have a bit of a bounce first. If not, then they're all going to go low to their next support lines. I think I've identified them already. So the Dow Jones would be this gap fill here. Gap fill to the downside. This should probably be a smaller circle. The Nasdaq next support, if it flushes its lows of, let's call it 270, would probably be well, it's not that obvious actually. Maybe around there, 250, a nice round number. If you don't find a resistance, obvious support zones, then sometimes it'll be some other index that does it, or maybe some of the stocks within the Nasdaq will just hold the line, like I don't know, Apple, Tesla, or maybe the SPY will find support somewhere, and therefore the Nasdaq will. So it doesn't. You can always find those levels. Yeah, I think the SPY. I remember drawing these before. For me, okay, this is probably a huge downside. I'll probably find support before it goes down. Actually, 6% is doable. Yeah, I think these are credible. 340, 320, nice numbers, but also it makes sense. So this was the high before the Corona crash, and then this was the support after we breached the Corona highs when they just did QE infinity to some degree. And then nice round numbers, and they're not too unrealistic on the downside. So yeah, I'm not going to do all of it. I don't want to spend too long on these general markets, but that's what I see on the up and on the down. I didn't really go through the charts already. I'm just doing it live. So just a quick recap. Yeah, and I don't really need to draw this line, but the Russell would be there. For the VIX, completely what I predicted also. So I thought 32 would be resistance. It has been. I knew we'd close above 28. I knew we would test 32 on this day here when we closed at 30. And then today, I knew there'd be continuation. And we're there at 32, just testing 33. 32/33 remain resistance. You can see why. Prior support becomes resistance on the way up. And also this resistance that has never been support remains the strongest resistance. If the markets keep going lower, look for the VIX to close above 34, I would say. Maybe test 35. That'd be very bullish for the VIX, very bearish for the markets. Otherwise, if the markets bounce, which I do expect tomorrow on Tuesday, I expect the VIX to go down, maybe even test 28, because the VIX typically gets destroyed when there's a strong bear market rally. I mean, maybe that's asking a lot, minus 12%, but at least 30 to 28. So yeah, that's what I expect to happen in general markets. Now the DAX has lost its 12,400 support, something I predicted also. We closed near low of day. I do think that it's possible that we bounce in the DAX tomorrow. It may sort of foresee what's going to happen in the US markets, US futures. So we could close above 12,400. That would give another boost to those who think, okay, let's have a bit of a bull run. So I'm looking for 12,400 tomorrow or just above as a close in the DAX, a close. We could just start lower. But on the way down, you can see I've already identified 11,500-ish. So let's see what happens. Now, the markets have taken all the headlines, but I've always tried to stress yields. But in fact, something that's moved more than yields, or something that's been more significant than yields, has been currencies. And I'll start with yields, but we'll go quickly to currencies because they totally intertwine now. All yields went up. Unfortunately, I did this video a bit too late, so now they've reset. But the 1 year, I think it was up. It suggests it was down, but it was up. That red candle is deceptive because it closed higher than, well, I don't know. It was basically sideways, nothing really to speak of. The 2 year though was up significantly. We're at 4.34%. That's pretty alarming stuff. That's more than the 1 year, but they're all sort of going up. The curve is still totally inverted. It doesn't matter that some of the inversion slowly changes from the prior inversion. Inversion is inversion. So I look at this 4%, right past 4% with the 2 year, very nice, strong day. 5 year, very strong. Now at 4.2. The 10 year is almost at 4. That's extremely significant. Right? This is long dated, yields. This is a 4%. This is when cracks happen all over the system. So very significant 4% on a 10 year. Let's see if we can get there tomorrow. Because even if the markets go up, you could still have yields venturing up. It won't take much to go and test 4%. But I do think, I don't know if I want to mention that right now, but with the markets going up, not only are the markets oversold, but I think the yields are totally overdone. Even though they belong even higher, I do think in the short term, it's overdone on the yields, and therefore bonds are a bit of a buy. The 30-year also very strong. And if we look at something like TLT, which is the bonds, this is 20-year treasury bonds. It's a bit of a buy. If I do something like the weekly chart, let me just get rid of this. And there's a guy, Harry Dent, I don't know if he's very well known, but he predicted the crash, but he always predicts the crash. So you can't give him full credibility, but he really predicted this one quite well. And there's another one with Brent Johnson with a dolly milkshake theory. Their predictions have really come true. But anyway, some commentators like Harry Dent say bonds are a buy. He's been saying it the whole time. Now bonds have been destroyed, but I think at this point bonds are a bit of a buy because look at this trend line dating back from 2007. Plus it coincides with this, let's call it 2013, 2014. No, well, you know where it is. That's a bit of a support zone. So bonds go up, yields go down. I just feel like bonds are a bit of a buy. So maybe we'll get a bit of a counter trend move in yields, which coincides with the bounce in the markets. Now let's check out currencies. The dollar, absolutely insane. Keeps storming up. Let's go on the daily. Just look at that total blowout. Past to 110, 111, just screamed up. Mainly because of basically central banks around the world just trying to intervene to save up their currencies because of inflation and failing. and people just fleeing to the dollar. The pound, for example, absolutely decimated today. You can't see it here because everything's reset, but it was down basically 2% against the dollar. Um, it did rally back a little bit. Let's just go on the 3 minute. Look at this, completely from 108. And actually, the day started on, 108, let's call it. But it was going down already. It was already one massive red candle on the daily. Look at this, just basically from 114, just flush, 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 flush. And then this last flush today, there was a massive move. It sort of recouped its losses, even went green. And then I think the central Bank of England came out and didn't really reassure too much, but it's kind of crazy. You've got the pound almost worth $1. You got the euro, which is worth less than $1. I mean, these are metrics I'm not used to ever considering, and it's almost like 111 euro pound dollar. It's absolutely incredible. And elsewhere too, Swiss franc. Look at the Canadian dollars, Australian dollars, commodity-based currencies destroyed. Look at the Turkish lira, which is actually a different sort of scenario. But look at that new high there. The Russian ruble is still doing quite well. It's probably the only one that's sort of outperforming the dollar. But otherwise, the dollar has just taken everyone's wealth, the wealth of all other currencies. So, and for that reason, and I feel like what happened with the pound was a blow off, even though there's legitimate reasons and long term, I still think that the dollar could keep going higher. I just feel like it's kind of overdone now. And also, if I zoom out of this pound chart, remember the pound and the euro and the Japanese yen make up the basket of the DXY. Now, if I look at this long-term trend line that I drew, and I only just saw it, it's kind of silly to have not seen it before. Pound is reaching real lows in this massive long-term channel. Now, it could easily get to 1 and still be roughly within the channel. And that's still a bit of a move down, 5%. But I think, basically we're there. So for that reason, I feel like the dollar could reverse a little bit at least. I mean, look at the euro also completely crushed. Completely crushed. It's been happening for a long time, but here we're at 96. We ventured into the 95s. I mean, if we've got to zoom out and then we see the next support levels of like 90 to 85. So, but so is this a level? Look, that peak there and that bottom there. So I just feel like we're going to have a bit of a reversal in the dollar. Dollar going low, even though kind of real resistance at 118, 120. I just feel like it's a little overdone. We could go a bit low and then sort of touch this ascending. That could become actual support rather than resistance, this ascending zone here, which would probably coincide with this ascending line. Yeah. Yeah, exactly. So we could have something like that. We could have the DXY come back down and test 110 and then reverse, go back up and see if we can get to 118, 120. So I think dollar down. I think yields down, bonds up, market up. Short term. I'll quickly go through gold and silver. It's a bit of a crazy day, but everything's a bit crazy. Closed at low of day. I didn't notice that actually, but okay, closed at low of day. To me, I mean, you'll go to 1600. If you breach it, you go to 1580-ish, maybe just below 1570, 1580. That's why the circle's there. But again, if the dollar reverses, if everything that I just mentioned happens, then gold will go up actually. And on the way up, where is resistance? Well, resistance is previous support. So I'd say, let's say 1560, definitely 1570. But that's a sort of $40, $50, well, $30, $40 move up. So, but again, the markets, when they reverse, when there's a bear market rally, everything's pretty violent. So you could actually get that kind of a move. So let's see if gold can go back up there. If not, it goes back down to 1600. So 1600 on the downside, 1575-ish below that. Otherwise, on the upside, 16, I would say 60, 70. Prior support becomes resistance. Silver, has been very strong. I had a bit of a weak day, but that's not too much. You know, I still haven't seen a minus 5, 6, 7% a day in silver. I did say it would go down to 1800 if gold keeps going down, so still hasn't reached it though. So very strong still. It really does. In my opinion, it belongs lower given what gold's done, given what the dollar's done, but still hasn't done that. And I've already said that I'm a buyer down here. So silver, good support around 18. If it goes lower, then we've got 17. I've shown that in the past. There are several reasons for that. The ascent, sorry, over here. Yeah, this line here. And there are other support zones below that, but I'm not going to get into that. So for me, silver, nice buys at 18 or just below 18. And then watch out, it's going to 17 basically. Finally, the GDX got this not destroyed, just went lower with the markets, with the metals. So totally expected. Getting very cheap though, getting very cheap, getting very hard to ignore some of these companies. GDXJ, as usual, had a more magnified move. We're getting close to these areas. Like look at this at GDXJ near 24. That's sort of the second last chop before the March 2020 lows of Corona. So, you know, this sort of area here, I'm really looking at this area here. But yeah, I get it. Down here, this was the all-time low. This lasted 2 days, and that is an area to buy. But what about just above that? Sort of this area here. To me, that, and plus, look, it's 20 on GDX. That's a nice number. On GDXJ, it's 25-ish. That's kind of one area. That's kind of the area we're almost at. That's what this red line is, where we are. And there's not much more of a move down from where we are to get there. 5% that's done in 1 day. So I'm looking to buy that as long as nothing else looks out of place market wise. And then I'm looking to buy it lower down there. However, I bought today because I believe the market's going to bounce. I did a bit of a knife catching buy session today. Even though I'm kind of waiting and expecting it to get there, I just feel like playing a bit of a bounce. And every time I played a bounce, I've got it right. And where will the GDX go if the bounce does work? Well, I expect it, like all the other markets, to retrace to its prior support. So if GDXJ, for example, bounces 6%, no problem. No problem. The market has a nice, crazy bounce up. Gold's up $30, $40. Of course, we can do 6%. What about GDX? That would require roughly 4-5%. So excellent. 5% on GDX is no problem. So what else? Finally, I will not go through the portfolio. I'll keep it nice and sweet today. The last thing I'll mention is Bitcoin, which is relatively strong, up 1.5%. Green when the market's destroyed, hasn't been destroyed that much. I expected it to go down during the weekend in anticipation of today with a market drop, but honestly, Bitcoin very, very surprising, held its own. If there's a market bounce tomorrow, like I predict, no problem for this reaching 21K. And you know what? It would start testing this downtrend line here, which to me is significant. And if it breaks that, then I think we could easily test 25K. I never thought I'd say that so soon, but I'm very impressed with Bitcoin. So to test this downtrend line, 8%, testing 21K. Get a bit of resistance maybe, but I think we're very close to a like strategic breakout on Bitcoin. So something for the bulls to look forward to. It's a shame I wanted it to go down to buy it, but that's my fault for being greedy. So I might have to buy some crypto miners tomorrow. Yeah, I don't think that'd be too late. So yeah, that's kind of a market wrap of all the main assets. I will do another video tomorrow, but thank you for watching. Good luck.